Let's move on to the markets. Before that, while the secondary capital market in Nigeria has had a great run in the last 15 months, activity in the primary market remains slow, especially with respect to IPOs in the equity market and new corporate bonds issues. To review Nigeria's primary capital market, I'm joined in the studio by Ege Akpata, Head of Capital Markets at UBA Capital. Thank you so much, Ege, for joining us on the show today. And like I mentioned, over the last 15 months, we've seen the equity market rally, but we're still yet to see IPOs. But moving back to the bond market, still pretty slow given the fact that yields have come down. Your thoughts on why bonds are still not in vogue for corporates right now? Because we've seen the likes of MTN raise $3 billion, but yet it's still not a bond. It's more of a syndicated loan from banks.
Well, in terms of the corporate market, you're right, there has been a lull over the past 15 months, but we have to bear in mind that up to 6 months plus ago, up to August last year, federal government rates were 16.5%. And when you bear in mind that you have to price bonds off the federal
Premium on that,
price, it just wasn't attractive for most issuers to enter the market. Now, so coming into this year with the significant drop in yields from federal government bonds down to 11.5%, it's looking a bit more attractive for issuers. But then you have the cycle of how these transactions really work. Most companies in Nigeria now have December year-end, some March. They'll have to use their audited year-end accounts for these transactions, and you wouldn't really have those accounts out until around now that they're coming out.
Yeah.
And so really you wouldn't hear much about these transactions.
So do you think we will see transactions though? The yield now at 11.5, some people are even saying we'll probably stabilize at these levels. It's not likely to come down further. So it's sounding like this will be the basis for any corporate bond issues. Do you think we will see some issues at some point this year?
Yes, we will. I mean, there are a couple of transactions in the works.
Okay.
Also bear in mind that if you're a December year-end company, you have till September to close your bond transaction, at least with the SEC. So there's kind of a clock ticking, and a number of transactions will close by then. But in terms of what you mentioned about the loan, MTN loan, it's a very large transaction, equivalent of like 470 billion naira.
Yeah.
And some might argue that the market cannot absorb that
such a big
size of transaction.
Yeah.
But we've had an 80 billion naira Lagos State bond. There was a 100 billion bond that was kind of suspended, and so we know 100 billion is possible in this market. But you wouldn't have, a single transaction of a 3 billion equivalent size, at least not yet. A lot depends on the issuers. Some issuers want to float on NIBOR, which has been volatile in the past, and you reference the federal government rate, 11.5, NIBOR is above that typically most of the time. So even on the long term, you could probably have a lower cost to your issue in terms of coupon if you fix your rate at the right point in the cycle.
Right.
And we think this is the best point in the cycle to fix your rate. Right.
And if we move on to some of the banks, they are not even issuing Naira bonds. There seems to be a preference for Eurobond, dollar-denominated bonds. Talk to us about why that is, because given where yields are, one would think that it probably makes some sense for some corporates, particularly the banks, to consider borrowing and getting, especially for long data transactions, approaching the Naira market.
Well, if you notice, a number of those those Euro bonds by Nigerian banks, typically they're to fund dollar transactions.
True.
And if you're a Nigerian bank, you want to fund a 5-year transaction in dollars, it's a bit risky to rely on domiciliary accounts, which could be volatile. So you fix your rate, you do a bond, you have a fixed rate, and you can on-lend profitably over the long term. Those typical Nigerian banks have more options for Naira. Right. You've got low-cost deposits in Naira, you can approach the interbank market in Nigeria, you can approach CBN. So they have a few more options, but in terms of dollar funding, some have decided to lock in their rates, and it's also a good brand builder. Right. Because the process is quite rigorous and it gets you to improve some of your processes.
If we can quickly touch the equity space, everyone's still hoping that there will be an IPO. Your thoughts about how that is likely to play out going forward?
Well, there's been some primary activity, even though it's mostly rights issues. And again, given somewhat depressed prices, I mean, the market has rallied, but indexed at around 33,000 is half of the peak in 2008 March. So many investors or many people that control companies are reluctant to have significant dilution by new shareholders at what they call depressed prices. So the rights issue is what you're likely to see keep going forward. But once the prices get to a more acceptable level, you will start to see public offers come to the market.
Where do you think we're likely to see that? Because we've heard some banks suggest that they want to raise equity capital. So do you think it's likely to be more from the bank side or some of the non-financial companies? Because some will argue that those are the companies that should lead the way, given where valuations are in the market today.
You're right. I mean, with non-financial companies, you're seeing some P ratios well into the 20s. You think that those kind of companies should go to the market. But again, you have to separate the foreign-controlled companies from the purely local ones. Foreign-controlled ones are not under any significant pressure, and they don't even want dilution. They'll rather increase their stake. So they are not likely to be.
They'll probably favor rights if they're going to do it.
If it's good to do it and use the rights to dilute local investors further. But in terms of banks, again, it's a mixed bag because you have some banks that have P ratios that are like 5, 6, and again, that's not an attractive price.
So it's probably not time for that yet.
Not yet, but given if they keep churning out good results in the next few quarters, the pricing could be right.
All right.